Bitcoin tends to have these moments where it goes up sharper than anybody thinks, and it goes down sharper than anybody thinks. Yeah, and so when you have such an inflexible supply, when you have such tightly held supply, when a lot of it's not even on exchanges, even a lot of the coins on exchanges are from people that are not even actively trading. They just leave some of their coins there, and so the amount that's pretty liquid is actually not that big. And so when a significant amount of capital wants to come in, that can move the price very quickly. And I track a couple things. I mean, obviously the ETF news is probably being constructive towards it. The upcoming halving. Um, but another thing I track is that Bitcoin price correlates very heavily with global liquidity, and it's just been a long bear market. A lot of the coins have rotated towards very strong hands, and so it only takes a small amount of new demand to move the price pretty disproportionately.
Lyn Alden is a renowned macro analyst, investment strategist, and a huge Bitcoin enthusiast who, very much like the rest of us, is looking forward to the 2024-2025 crypto bull market. According to Alden, several extremely bullish events and fundamentals are converging for the leading crypto asset as we speak. One, of course, is the tightening supply fundamentals, currently being caused by strong hand hodlers refusing to let go of their stacks. After the halving next year, Bitcoin supply will become even tighter. Another is the increasing demand caused by firms like BlackRock and others that have applied to offer a spot Bitcoin exchange-traded product to their wealthy clients. The third reason for Alden's extreme bullishness is the proven correlation between Bitcoin's price and the global broad money supply, M2. After the mostly unprecedented and coordinated tightening by central banks, M2 broad money supply is now on the rise. This chart shows how deeply Bitcoin's price correlates with the global money supply. As it continues to rise in 2024 and 2025, it is expected to contribute to further increases in Bitcoin's price. This again makes us appreciate the ingenuity of Satoshi's 4-year halving cycles, which are precisely timed to correlate with the business, U.S. election, and money supply cycles. According to Real Vision's founder and chief executive Raoul Pal, this is exactly why Bitcoin, and by extension, other crypto assets' prices, will continue to soar and outperform traditional financial markets. As bullish as Alden is on Bitcoin, her outlook on the United States economy, both in the short and long term, is nowhere near as optimistic. According to Alden, the economy of the United States is heading for more periods of uncertainty, including a very high risk of another widespread banking sector crisis. We will now bring you clips from Lyn Alden's recent interview with Simply Bitcoin. Please watch, share, and like this video. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. You can join the conversation by dropping your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and significantly contributes to the channel's growth. Thanks, and enjoy the video.
Basically, the reverse repo facility, the way to think of that is that basically represents excess demand for T-bills. And so what the Fed does not want is for there to be so much demand for T-bills that it pushes T-bill yields below the lower end of their target short-term interest rates. And so they have this release valve where money can instead go into a reverse repo facility and get yields that are similar to T-bills. They hold it at that level to make sure that basically there's no reason for T-bills to go below the reverse repo facility rate by any significant degree, and that's part of their kind of tightening process. And when the Treasury issues a ton of T-bills, that money can come out of reverse repo and into T-bills. So reverse repo is one of those things where, in a healthy market environment, there really shouldn't even be a reverse repo facility. Right now, it's just kind of this excess pocket of liquidity that was built up during the stimulus, and now it's kind of coming back out, and so it's kind of counteracting the Fed QT. The reason it's relevant is because after it runs out, um, if the Fed continues doing quantitative tightening, that'll be start to come out of bank reserves. It'll start to kind of kind of reduce liquidity in the core banking system, and therefore increase the odds of some sort of liquidity accident. Which if it shows up in the Treasury market, you'd probably have the Fed come in and stop QT. A similar thing happened back in 2019 with the repo rate spike. It wasn't some gigantic event for normal people. I mean, basically, it's one of those like quiet crises that most people don't know of. But if anyone who was like following macro or banking at the time was like watching this with interest, because you had kind of an interbank overnight lending rate just completely blow out. And the Federal Reserve, in addition to addressing that market, had to come in and start buying treasuries again, because that was kind of the core problem. There was a treasury oversupply problem. And going back to the prior point of, soft landing versus hard landing, I've been using the term emerging market landing, because when you look at like recessions in emerging markets, they look pretty different than we see in developed countries. You know, um, you have an environment where you have kind of recession-like conditions, but asset prices in local currency terms are still doing okay, because the local currency is pretty running, often very large deficits, is often inflationary. Um, and so you get these weird dichotomies where it's like a hot recession, right? It's like an inflationary recession, a stagflationary recession. And so asset prices and things like that are not doing great in, dollar terms or gold terms, or things like that, but they're doing okay in local currency terms because local currency is having a problem too. And those types of recessions only come up rarely in developed countries. We had it back in the 70s. We arguably have it right now, and we had it back in like the 40s. And those are kind of the instances where this pops up. We also see there's a very big divergence between fiscal and monetary. So monetary, like, Federal Reserve, Jerome Powell, they're trying to be relatively tight. They're trying to hold rates at a high level. They're trying to reduce their balance sheet. It's largely coming out of reverse repo. On the other hand, the government, Congress, president, and all these groups, they're running very, very large fiscal deficits. And it's not even just now, it's accumulated from decades past. So a lot of it is just interest expense is completely blowing out, ironically, because the Federal Reserve is trying to tighten. And fiscal deficits, all else being equal, are stimulatory and inflationary. So we have this kind of weird dichotomy, which is that if you're primarily reliant on short-term financing or a lot of financing, you're probably in trouble. You're already probably in a recession, or at least your industry is. And if you're not, and if you're on the right side of deficits, if you're the military-industrial complex, if you're kind of in your own, if you're on the right side of all this interest expense, then you're doing okay. And so I think that's why the economy is kind of feeling very odd to people, because it's we have a larger gap than normal between fiscal policy and monetary policy, and so that results in kind of very bifurcated economy and very bifurcated markets.
During the interview, Alden reacts to Jamie Dimon's latest criticism of the cryptocurrency industry. The JP Morgan chief executive officer appeared for a hearing before the U.S. Senate Committee on Banking, Housing, and Urban Affairs on December 5th and made certain remarks about Bitcoin and the overall cryptocurrency industry. While answering a question from Senator Elizabeth Warren, another huge crypto critic, Dimon said, "I've always been deeply opposed to crypto. The true use case for it is for criminals because it is somewhat anonymous and you can move money instantaneously. If I was the government, I'd close it down." Alden notes that the government's insistence on being able to monitor and control people's financial transactions is the exact reason why the cryptocurrency industry will continue to grow and thrive, regardless of what they do to disturb its growth. Here are more clips from the interview.
In Broken Money, even though it's a book about money and about monetary history, past, present, and then future, and kind of informing people all about, different types of money, there's a whole final part about privacy, and about human rights, and that intersection between technology and human rights. And so there's a reasonable question: why is that in a money book? Even like, a handful of reviews are kind of like, oh, I loved like most of it, but why is there like this weird section in there? But I think people that follow my work would know why it's in there. That basically you can't completely separate money from ethics, or money from privacy, and money from, just all these other topics that are relevant. And so, part of the discussion, part of, what can in some countries slow Bitcoin down, is basically people begin to view it unethical for one reason or another. They listen to Jamie Dimon, or similar types of people, and say, okay, that's all for money launderers and things like that. So I think it's important to kind of counter that, and to say, okay, well, wait a second. I mean, why is privacy in and of itself bad? Why is being able to self custody and then send money quickly bad? Why do we have to go through Jamie Dimon's centralized surveilled, ledger if you want to send money or hold money, right? And so that component I think is really important. And what FinCEN's trying to do here is they're doing their best to try to slow down privacy technologies, make it burdensome for any sort of Bitcoin broker, Bitcoin exchange, to interact with any sort of even non-custodial privacy tools, or people that have recently used them. And so it's trying to add friction for people that are trying to be relatively private with their money. And it's not even just privacy from the government; it's privacy from corporations. If I pull my money out of an exchange and I spend it on different merchants, I don't necessarily want that exchange to see all the things I'm spending it on, or you know, it's privacy. It's my money, right? And so um, I think that as this moves forward, I think that's privacy is going to be one of the biggest battles, right? It's already the case that that's one of the things that people actually go to prison for, right? Operating a mixer, right? Things like that. So, you know, privacy is already kind of the biggest kind of highest stakes battleground, right? So I think a lot of countries are coming around to say, okay, well, you can hold Bitcoin in a ETF, you can hold Bitcoin in a registered, big like honeypot silo that we have surveillance and control over. But what countries don't really like is self-custodial Bitcoin, private Bitcoin, and things like that. Um, and so I think that's going to be an ongoing thing that's not going to be resolved anytime soon, and there's occasional flare-ups. And right now, what we're seeing is a pretty significant attack by FinCEN. And so I think it makes sense to be aware of it, be informed about it, and do your best to push back against it, because it's going to be a long war, in my opinion. And I mean that in the hopefully in the peaceful sense. Basically, that one side can be aggressive, and the other side, we have memes, right? We can win the war through narrative. We can win the war, and especially in countries like the United States that still have a pretty good rule of law, right? I mean, we saw, for example, the SEC in their attempts to block Bitcoin ETFs got absolutely smacked down by an appeals court. Their arguments were said to be capricious and arbitrary, um, and that kind of thing happens all the time. I mean, back in the 1990s, when Phil Zimmerman, released open source encryption, the United States government went after him. So he published it in a book and said, "Well, it's the First Amendment now. So kind of come at me, bros." And they lost in the United States. Rather through the humor route, the satire route, the court jester route, where you're basically informing people or pushing back on things in funny ways and therefore helping change their minds. Or two, you're taking the more rigorous approach and saying, okay, well, here's all this case law, here's all this precedent, here's the Constitution, here's this other set of laws that makes this clear overreach, and that people do have these rights. But I do think this is going to be kind of a multi-front, long-term.
After Dimon's latest remarks went viral on X, the platform's vibrant crypto community quickly pointed out his hypocrisy and the absurdity of that remark coming from the executive of a major financial services firm. One user pointed out that since 2000, regulators have fined banks 7,400 plus times, totaling fines of over $380 billion. In particular, JP Morgan Chase's parent company is the second most penalized financial institution after Bank of America. The firm has paid almost $40 billion in fines for 272 violations over the past 23 years. Dimon really should not be the one talking about crypto being used for anything illegal. What are your thoughts on the interview? Please drop your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up, because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.